All right, folks, so this video we're just going to touch on a little bit of the tax implications of investment properties. So as you know, there's two ways you can go with this. The buy and hold strategy, personally what I like, I think that's the better way to go. You know, you're going to buy a property, you're going to rent it, you're going to make money off it over time, maybe, have it paid for itself. Then you have flipping where, you might buy a house and hold it for a few months before you rehab it and sell it again. So let's talk about some of the implications here. First and foremost, the way that you're going to report the income from the property, that whatever you invest in, it's going to depend on your intent, right? So the IRS is going to evaluate this differently if it's buy and hold versus if it's buy and flip. And the intentions behind it are really what's going to determine that. So it's important to think about that. Now, the headline of the email that this video was sent out in was, watch this before you get into investment properties. Here's the deal, guys. There's a lot of different implications. Business taxes, they're kind of their own thing. They're kind of an animal above W-2, but properties are a whole other animal entirely. So you really want to tax plan ahead of time depending on what it is you're trying to do with investment properties. And what I mean by that is, aside from, the intent and how that affects the way it runs on the tax return, you also have to consider the tax and even the liability implications of doing this investment through a business as opposed to doing it through your personal name. There's plenty of people who go both ways, but especially in the case of flips, you probably already kind of run the numbers and have an idea as to what kind of a net profit you're going to turn on this. If you haven't really thought out the way you're going to report that on a tax perspective, you might end up being really disappointed by what your final after-tax profit is on a flip, especially considering the amount of risk and work that goes into doing a flip. So before you get into any investment properties, whether you're going to buy and hold or whether you're going to flip, it's very important to do a tax plan first. And when we work with our clients, we kind of want to look at their whole business. So many of you watching this, you may be real estate agents who are doing commissions and maybe you're doing investing on the side, or you might be a straight investor. But regardless of what position you're in, the tax implications of these different types of property income they're just very convoluted and complicated and nuanced. So you want to walk in with a clear vision of what it is you're going to be doing with it on that side. So if you're getting into investment properties, but you don't have a tax plan in writing that details how it is you're going to report the income, how you're going to run the income, how you're going to account for everything, because you also have to make sure you're properly accounting for what you put into the house for tax purposes, then I recommend going to rottweilertax.com. Take a look at the site a little bit and see if maybe working with us is right for you. We're definitely not for everybody, but if you're really serious about getting into investment property, you're going to need some really high-end guidance, and it's something I know that we can give you, but I know that most CPAs in your area probably are not going to be specialized in it like we are. So that site was rottweilertax.com. If you think you might want to work with us on your investment properties, go to rottweilertax.com/book to schedule an appointment, and I'll talk to you soon.